Tuesday, January 7th, market analysis, Dan Ehrlich. Good morning, 10 o'clock California time, just a little after the middle of the traditional trading hours. I always start out with the stock market indexes, go to futures, and then other topics, and I will talk about the Santa Claus Valley probably until the end of the week, and then that's it for this year. It worked, not particularly that profitable, but it made some money. Now, again, the E-mini is currently down about 4 points or 40 on the day and showing no real good sign at the moment of turning around. I think we might see a little bit lower lows. Now, here's the thing. I'm allowing for a little bit lower dip and maybe even down toward at the lowest, really, 59.20. I don't even want to see that. I'd like to see something significantly higher and then start to rally in a new high ground for the last few days again, hopefully by the end of the week. So I'm bullish, but I've got to maintain some significant support areas. And if they are broken, and one of the two is critically important, 58.75-ish, we get below that, close below that, you got a little bit more of a downside breakout, probably. And I would expect then a move down to about 57.95. And if that doesn't hold, and it might not, then you could see a move down a significant amount, 55.75, something like that. But long term, I don't think this is any kind of a top. And frankly, I don't look for any new lows besides this little dip low we're having right now. Let's go to the short-term chart. 5-minute data, E-mini, just finished making a minor new low for the day. Bounced a little bit, nothing special. We start getting above, 6,005. Then maybe it'll be able to push through this resistance. The trend is up last few days. And we deserved a little bit of a downside dip after 2.5 days of really good strength. Next, Spider. Close the gap. I talked about that yesterday. Done. Came down a little bit more than that. Nothing damaging about that. But it has also got to hold at 580. Closing below that, and you're going to have another stair step down in this downside correction, which implies to me it's going to go a little bit further than I would have originally thought, and it's going to last a little bit longer. I'm not looking for any big, huge, sharp break, but meaning 1 or 2 days worth. I think you're going to have a stair step down type of correction, and it may be over already. The two lows we just had last few weeks have worked out fairly well so far. And just because we're dipping down about 5 1/3 at the moment, which is a pretty good dip, does not really change my overall opinion, which is obviously bullish, unless we have a little downside breakout below 580. Next, 5-minute spider just made new lows, minor rallies expected, and then we're going to see what happens. This is the chart that represents the Santa Claus rally. At a certain time of day, at 7:10 a.m. California time, 3 days before Christmas, 2 days before Christmas, and 1 day before Christmas, same time of day, we bought the S&P SPY, and that's what the strategy is that we've researched has done the best over the years. The first entry was just fabulous. Basically, we bought a downside breakout in new lows, and it turned around. We got in the next day on a downside dip. Good. On the way up in general the next day, which is a short trading day, and even the day after Christmas, it went sideways to a little bit higher. But that next couple of trading days, it came all the way back down, turned most of the trade into a loss, and then started to creep back somewhat over the last few days. Now, because the first trade made $401, we only lost 25 on the other one, and on the last one, $64. So we are ahead by $312 for the 2024-2025 Santa Claus rally. Momentarily, I think the market could dip down a little bit more, looking for a turn up. QQQ, gap is closed. I keep telling you, gaps are almost always closed and relatively quickly, usually. Excuse me. But now what? It could come down a little bit more and still not do any damage. I do not want to close below 505.70-ish. That would signal that it's probably going to drop off a chunk more, and I'm going to say maybe 483. But I'm not looking for that. I'm looking for it to hold here or a little bit lower real soon and start to make its way back up to new highs above 528, then of course above 532 and above and into new historical high ground for the QQQ. Next, short-term chart, we're just making minor new lows. So nothing's happening that I can scream bullish on at this moment. And we're dipping down in the NASDAQ a little bit, and all the other comments basically still stand. And here's the 5-minute chart on the NQ. Now, YM, Dow, a little bit different story. Bullish engulfing at the low point. That almost held. We made a new low by a couple of ticks or something. And we're going sideways. But the short-term trend of the last few weeks, very few weeks, is down, and it broke a bull trend line, the bottom of an upward slanting channel. So there's a little bit more bearishness as the overall picture and formations apply. The test of support here is the same support that we saw back in late October. And so all of a sudden, this is going to make new lows if you drop below 42,274. It'll make new lows since September. And that's a different kind of story. So we're getting softer, quicker, faster on the YM in general in the last month or two. Next, just the 5-minute chart. Don't see anything fantastic here. Got to wait to see if support holds and we start to climb. Next, we've got Russell. Went all the way to the top of a historical resistance area and turned out to be a bullish resistance line. Bullish because it trends upward, resistance because you're trading underneath the line at that time, and stopped in overbought conditions. Started to falter and kaboom. End mostly its decline with a huge down day, and that was on December 18th, 3 weeks ago, and banged into support, which was tested in oversold conditions, bounced, tested again, okay, bounced, minor new high. So it looks like it's trying to survive in this little trading range and just a little bit above another support area starting around 2235. It could dribble off into it somewhat, but I think it's going to, in a broader sense, hold somewhere in this red zone, the top half of the red zone, frankly, and start another major move up. So I'm allowing for a little bit lower lows, and that will be since September again. And here's the 5-minute chart. Big lots of sideways here lately. Not really much, direction stuff. Okay, bonds and notes. I'm sorry to say the bond market just is not doing at all what I was expecting. We have a new low by a substantial amount today. I gave it to October and to bottom out, and it tried to in early November successfully for a couple of weeks, 3. But when it got overbought and against a resistance area, that's it. I didn't expect it to make new lows. It did. Even a buy signal right at the right spot didn't work. It immediately got broken and it made new lows. And we have stayed in new lows. The only thing I can say is oversold conditions, bounced a couple of days worth, and here we are again and oversold a new low ground. Now it's also below an old neckline. This dotted cyan, I guess it is, line is off of this important high. And that was April 5, give or take it. Yeah, April 5. And this important high, 1228, that's what it looks like. Yeah, 1227. So that formed a neckline on a single shoulder, head and shoulder bottom. And I'm going to erase this and I'm going to erase this. So now I'm getting rid of the head and shoulder double pattern and the single shoulder pattern, which broke out okay, not that classically, was supposed to get up to here, 140-ish, got up to here, 127, had a nice move, but it didn't fulfill its objectives. And thinking the next break after that rally high was going to hold at the neckline, it did, but then it tried and failed today in particular. So I really should, my disciplines tell me I've got to do this, erase all of the indications of head and shoulder bottoms. It was a very, very big one, but we're just failing. I'll leave that bear trend line in because that's still relevant. but I can't call it a neckline anymore. So what are we looking at? Oversold conditions in new low ground for a year. Rally should stop a bump a little bit higher at resistance, maybe up to about 116.13, and then try to make new lows. Now, everybody knows the Fed is supposed to start to lower rates slowly, four maybe times next year. I don't follow it that accurately. That would imply that somewhere soon, time-wise, and not very far lower, that this is going to turn back up, but we'll see. So far, the charts don't show me that. Maybe we'll end up with a very broad double bottom, and it'll come down to 717. Next. Notes haven't ruined the whole party yet. This is support level. I got a buy signal at the bottom, which is still a bottom, although we've come today very, very close to the new lows, but not quite. And we're not really bouncing much yet. Only a little bit, middle of the range, something like that. But if we're all of a sudden to start to move higher and start to close above 109.07, then I'd be sorry I cancel out the picture in bonds, I'll tell you that. And this is still alive, so I'm not going to cancel any head and shoulder bottom indicators or my drawings, annotations. So I'm leaving it. Neckline held. Got a bicycle right smack dab when it tried to test the neckline in a support area. All great. I just have to have a rally. We're about to cause me to erase all less annotations for the bottom and notes also. Okay, enough of that. Now, gold. Okay, crude, heat, unleaded, natural gas. Overbought, tested a bear trend line, stopped at yesterday's high. I think I mentioned it at the time it was there, and started to pull back. But here we are again, high and last, up on the day, and pushing against that line. Let's see if it'll stop it again. Any close above the line should drive it up to previous highs of some significance, and there are at least three, if not four or five, and that goes back a little over a year for the rally to stop periodically on this climb, but we're not starting that story yet. I got to close above the bear trend line. Otherwise, you're overbought. Hit the line, and let's see what happens. I'm getting bearish. I just want to see minor new lows for a few days and more weakness. Next. Same commentary in general on heating oil, overbought, but not particularly a special price level. For some reason, it's just floundering here. So I think it's going to come back down some very quickly, very soon. Brand new sell signal in natural gas. Big red today. We have a previous bear trend line that was pretty good that we crossed a couple of weeks ago. That was also on its way up the next 2 days to cross a neckline and a head and shoulder bottom. And now I'll get a little bit more obvious with the head and shoulder bottom, shoulder, head, and shoulder. The head and shoulder bottom that was the head by itself already worked up to here in about 4 days after it broke out. Super fast, quick, not very big pattern. But it ended up with a sell signal on the upside objective touching. Okay, so down it went again, held around the neckline, interesting, and started to climb again. But a resistance area and overbought conditions on an upside gap stop the move. I'm going to start calling this a possible exhaustion gap, which I think I mentioned on that date. Because now I don't know if I'm going to get my upside objective fulfilled, which was supposed to be a 4.471. We have a brand new sell signal today. I like it. I don't see anything wrong with it. That implies we're going to head south and start to get down to 3.28 and probably down to, I'm expecting, say, 2.9. Yeah, 2.8, 2.9 soon. Next chart. Gold, silver, platinum, copper. So sideways last couple of days, little bit of an uptrend. Dominant situation is a possible lousy looking head and shoulder top. I don't like the neckline, slanted too much. I don't like the fact that it's gone sideways way too much, typically speaking. If this thing doesn't start to head south right away, I'm going to start to remove the annotations on this gold head and shoulder top, erase the neckline. and the downside objective. It ain't working. Silver, pretty much the same story, but in this case, we did test the neckline. It did get broken on a close a couple of times. There was no follow through, and we now have had for a couple of days new highs for a couple of weeks. Excuse me again. Not what head and shoulder top formations do. Unless it immediately before the end of this week starts going south a lot and hopefully break out, I'm going to also erase all these annotations for the head and shoulder top in silver. It ain't working. Next, platinum went below the neckline, same story, didn't stay there, climbed right back up, new highs for a few weeks today. Looks like it's going to stay there price wise, closing firm. Nope, that's not what we're supposed to be doing with this head and shoulder top. I will also begin to, or completely erase. It's nice that we got a bear signal at the top of the rally, but now I can't say it's the top of a head and shoulder top, the head of the formation. Next, support basically held or a hair under, and we're starting to make minor new highs for copper. I can't rule out a move up to the high of the reversal of 4.33, or even a move up into this resistance area, 4.45 and a little higher. I think that's possible. I don't trust it too much because the major trend is down since May in particular. Yeah. So next, soybeans, oil, meal, corn, wheat. You know, I go back and forth between major long-term bottoms, maybe building, maybe not building, new lows that occur, got oversold, came back up a little bit. Beans, oil, meal, still favor the downside. We did make a minor new low today, but we're currently trading slightly higher. Unless I get some particularly profound upside or downside breakout. And for beans, that's going to be a good strong close above 1046. Otherwise, sideways to lower. If you rally up with the beans in soybean oil, all you're going to do is bang up against a hell of a lot of resistance. So any rally that's a little continuation of what we're starting right now, I don't expect is going to go very far or last very long. Major long-term trend. Yep, bearish, to say the least. That's about 3 years, I think. Okay. And if it does rally, has a downside correction, which you would expect, then starts to rally again, I could have a really great combination of patterns developing, but it's too soon to talk about that. Next chart is soybean meals making new lows for a week, coming close to support, not oversold, could easily drive into the support area like it did a few weeks ago. I can't come up with anything super, I can bearish. That's about the best I can say. I'm looking for test of lows. We may bounce a little off support, but still bearish. And what have I got for corn? A sell signal didn't quite work, but it was close to the tops so far. And it refuses to break out to the downside and stay there, and so far refuses to break out to the upside. But the trend has been, not too bad actually since August. Corn is one of the few of the grains that I could say some bullish things about the trend since August. Is up, higher highs again and again and again, higher lows again and again and again. Head and shoulder bottom formation broke out, but then settled back below the neckline. Shouldn't do that. But then you had a secondary breakout, which so far is okay. But I don't like the sell signal here. It's just that it hasn't dropped. We're a little bit between a rock and a hard spot. My favoritism is slightly up, but we'll see what happens. Don't have a strong opinion here. The bigger pattern, yeah, it's bullish, and it's bullish all the way up to 494. But let me see a new high close above 460 right away here, which it could do. Wheat, broad double bottom possibilities. Obviously, the long-term trend is major bearish since the war began 3 years ago. Now, does have potentials of double bottom, does look like another grain chart a little bit. But we have to have rallies that make new highs, stay at new highs, downside correction, another set of new highs in order to start to like the story about a double bottom. All I got is a couple days up, and that doesn't cut it. Cattle overbought. I think it's going to top out in this ballpark price level, come back to support, then maybe go higher again. Hogs are exactly the opposite. Excuse me. I'm looking for a little bounce out of oversold conditions up to 82 and three quarters, and then probably a test of the downside dip here. And the one stock that I've been talking about for a month or so now, oh wow, SQ did close the gap almost completely today. I think it could turn around and start to make new highs. Back to the E-mini, nothing special. Bouncing a little, damn. Yeah, but that's it. Okay, I'm through. You guys have a great day and profitable trading to you. I'll get rid of this cough.